Goldman Sachs, add them to the doom and gloom crowd predicting a recession.
Yeah, they said it's either that we're already in the beginnings of a recession, which is 2 down quarters, or we're going to be there soon. Now, they suggested if we go into a recession, that it's going to be a relatively mild one, 3 quarters. And again, this is just a prediction. There are other people, as you mentioned, David Malpass from Bear Stearns, who said it's going to be bad, but it's not going to be so bad as a recession.
Yeah, he said that we would skirt a recession. So Bear Stearns has a different opinion than Goldman Sachs. Doesn't surprise us, though. But, okay, one of the economic calamities that Goldman Sachs predicts includes a 6.5% unemployment number by the year 2009. Now, that would be pretty serious.
It would. Of course, they also see the Fed slashing rates to 2.5%, which would benefit Goldman Sachs. Are the company's predictions prophetic or self-serving? Let's ask our panel. Eric, I'm shocked to even suggest that they would think of serving themselves in these predictions.
Listen, the smartest guys on the street, it really worries me that they would predict a recession. I don't think we're going to have a recession. We're in a presidential cycle. The Fed is lowering rates. They'll continue to lower rates. And typically, we don't go into a recession during the low. It helps us when we're already in a recession to come out of one when rates are lowered. We don't go into it with lowering rates. I think we're going to be okay. I don't see a 6.5% unemployment number. By the way, I think that number, that 5.1% from the last report, will come down. I think that'll be revised. I think that we're going to get under 5% again. And by the way, guys, I think Bernanke is going to come and make a surprise rate cut, and I think that's what you're seeing in the stock market today.
Peter's going to hate that. Peter.
Well, first of all, you know, Goldman doesn't always get it right. In mid-December, they said that the best investment for 2008 was going to be shorting gold stocks, and that's probably the worst investment so far in 2008, being short gold stocks.
2008 ain't over yet.
Yeah, well, I know, but we'll see. But as far as the recession, I think they still have it wrong. They say the recession is going to be mild and over by the end of the year. They are completely off the mark. This recession is going to go on for years, and it's going to be the most severe recession we've ever lived through.
Well, by the way, Peter, we are saving this tape. You realize that. We're going to play this tape back.
By the way, you can replay Peter. Peter's been saying this for the last 10 years.
If you want to look at what I've been saying, go to YouTube, look at my clips. I put my clips and my accuracy for 3 years up against anybody.
Okay, Nicole.
Go look at them.
Can we
the
go
record
to
is
unemployment
clear.
for the moment? Eric believes that things will be okay, but here's my concern. So much of the market is psychological. You'd agree with that, Eric. When they start to hear these reports from Goldman Sachs, that big CEOs start laying people off or simply shutting down on hiring. You saw the monster employment index was extremely low this time around. This gives us an indication of employment, and it just makes me wonder if it's not all psychological, and that is alone enough to slow things down when it comes to hiring.
I mean, I'm not as optimistic as Eric is. I would like to be as optimistic as Eric is, but I'm not. I think that you know, there is the psychological impact, and there are some real numbers out there that show that companies are going to do what they can to sort of batten down the hatches and keep costs low. You know, I mean, you can see that already in marketing and advertising spending, one of the first things to get cut from companies, and also in hiring. So, yeah, you know, I mean, I don't know if it's going to hit that 6.5%. That does seem rather drastic and dire, but, you know.
Dire? Put a 1 in front of the 6. That's dire.
60. By the way, Eric, you threw something out. I don't want to let it pass before examining it a little more closely. What makes you think that we're going to have a pre-meeting rate cut?
Well, I think Bernanke realizes he has to do something. These numbers aren't great.
Is there any information? Is that the word on the street?
I think when a market trades the way it did today, where you see a big washout and you see some technical numbers getting taken out on the downside, typically you see follow-through. When it reverses itself like that, usually there's an impetus, and maybe it's some sort of, you know, Wall Street people talking about potential, but this has been passed around for a while. This isn't new, and I really think... I think there's more to this than just a rumor.
Joran, we just heard from Charles Plosser the other day, one of the voting members of the Fed, who said, you know what, I'm way more worried about inflation right now. I mean, you start hearing from people like that, and you begin to wonder if there's that much dissension among all of the members of the Fed, will we see an intraday meeting cut? Intra-meeting cut,
I wouldn't be surprised. I wouldn't be surprised. I think we're going to see Fed cut aggressively. I think we're going to see them cut aggressively because inflation, in their mind at least, is still a distant threat, and the actual pain right now is the pain of a likely recession. So I think they'll buy the short term, in a sense, by trying to avoid a recession. I don't think they'll be successful, but they'll try that. And, you know, we'll pay for it with significantly even higher inflation than we have right now down the road. But I expect the Fed It's a short-term thing, but I expect the Fed to cut interest rates
Peter, I know you want to
aggressively
get in, but I want to go
months.
to Nicole for a second, because Goldman Sachs also said, almost as a postscript, despite our near-term concerns of a recession, we're quite optimistic about the economy's longer-term prospects. So they see brighter times ahead.
Yeah, I mean, I think Goldman Sachs made it very clear that they don't see this as some kind of prolonged event that's going to, kind of paralyze the economy over the next couple years or 3 years. And going back to the idea of it being self-serving for Goldman Sachs, I mean, they are a bank.
I hope it's self-serving. It should be.
Of course they're going to do things that are self-serving. I mean, they are trying to make a profit, and they are smart people, and they're doing their research, and they're going to back it up with whatever.
Eric, we're hearing from people who are emailing the show saying we're in a bear market, and we should just stop trying to act like we're not.
Well, we're in a housing recession. We're in an auto recession. But we're certainly not in a market recession, and we're not in a bear market right now. Buy this dip. Just go in there, and if you're in for the guy who
the dip, by the way, has gone the other way. The